Hey everybody, welcome to the morning market briefing. It's Monday, February 27th, 2023. Unusual show today. With Ben out, Tom and I thought we would open today with a discussion about race. Ben ran the Rock and Roll Half Marathon yesterday in Las Vegas, Nevada. Known for its distance endurance competitions. It's what everybody thinks of when they think Vegas. Ben flew back overnight. Questionable decision to run a half marathon and get on a plane, but now he's being a bum. He's not here yet. So Ben crushed it, man.
Yeah. We're just going through the stats here. We've talked about it a lot, I think, either in client meetings or on this call, that Ben is an athletic freak.
He's a freak.
Particularly for his size. We were trying to figure out if we thought there was anyone of Ben's height or taller that finished ahead of him, and it's got to be.
It seems unlikely.
Yeah, you don't see a lot of 6'5" marathon runners out there, so I would love to see a height adjusted scoring system for this half marathon. But Ben absolutely dominated. You want to go through the stats here?
Ben finished in the top 100. He was 99th overall. You're like, oh, okay, well, top 100. 11,907 people ran. So top 100 there. He was 85th among people identifying as male. Out of 5,703, finished 85th. Men between the ages of 30 and 34, he finished 13th. Just blistering. We were looking at his splits. There was like a 2+ mile period where he was averaging 5:40 a mile. Which is pretty insane. His overall average was 6:19. He was cruising, man.
Yeah, we had live updates. He sent an app. We were
tracking him on the app, and he said at the mile, I think he said mile marker 10, you kind of make a turn and you're going slightly uphill and the wind's in your face, and that allegedly slowed him down. I don't know, 6:19 average pace over 13 miles is absolutely cruising. He's now decided that he's going to run a marathon. So he's doing a marathon. He's done a marathon before, but it's been a long time. He's doing a marathon that is all slightly downhill.
Yeah, it's also in Vegas.
Yeah.
And apparently they drop you on the top of a mountain and then you run down back into the city. So that should be interesting. We'll see if his knees survive.
Yeah, because he's a big, tall boy.
Yeah. There's a lot of gravity and it gets heavier as you get down that hill.
But yeah, Ben absolutely crushed it. When he started doing this, he wanted to break an hour, 30 minutes. Last week, he said he thought he would beat 125 and felt like it was almost anticlimactic, which I guess is kind of the point of training and preparing, that you feel like, hey, I trained for this goal and I know I can do it. It came in at 1 hour, 22 minutes, 37 seconds. So congrats to Ben. Just insanely impressive.
We should have an office contest to see how long each person in the office can hold a pace of a 6:19 mile. Because I would say that the over-under is, I would call it 1,000 feet. I mean, that's like a full sprint for me. So credit to Ben. So
yeah,
we'll see what time he rolls in and how he feels, because I imagine his legs are going to feel awful.
He's got to be hurting. Credit to Ben for coming back. I would have spent an extra day or two recovering, some ice baths, maybe a little sauna time. But he's coming back, so we'll see him here. Sounds like he'll be here early this morning, just not for the call. But great job by Ben. Congrats. I know some of our clients knew he was doing that, so we figured we'd give you the update and talk about the race. Market's up relatively nicely on pre-market trading basis. Dow futures up 51, S&P up 58, NASDAQ up 71. Oil down just a little bit. We do have some stories coming out of the weekend on an otherwise relatively slow day. This week is deceptively busy, though, I will tell you that. We'll do a little preview here at the end of the call. But Pfizer in early stage talks to acquire Seagan. As you might expect tonally from these calls and with a lot of these mergers and acquisitions we've discussed over the last couple of years, there could be a real challenge on the antitrust side. I would not be surprised at all to see the Department of Justice kind of poo-poo this thing. But Seagan currently has a market value of about $30 billion. Buyout potentially would be in the range of $40 to $50 billion. This is a company that was in advanced talks to be acquired by Merck last year for a $40 billion plus price tag, and that fell through. They have a very, very strong cancer portfolio, but very early as it relates to their actual revenue. So they're in kind of early stage on some of the development and marketing of some of these drugs. But it's pretty consistent. I mean, this is kind of Pfizer's MO. They buy you, they make a bunch of money off your drugs, they lean on patent protection as long as they possibly can, and then they find kind of the next thing they can go to. Any thoughts on this, Tom?
I mean, I think they need to do something, right? Pfizer stock has really languished. They made a ton of money for free with no strings attached, and the next thing is they've got to turn around and make money off that money, because COVID vaccines have fallen off pretty significantly. I don't think that's a well they can continue to go to, and so they need to take that $50 billion they got handed, and they got to do something to keep the pipeline full, because they need that next blockbuster drug. But I mean, you see this happen quite a bit with drug companies. I think Gilead is probably the most extreme example. They basically cured hepatitis C, made just an absolute fortune, and for like the last 8-9 years, they've been sitting on that cash and haven't been able to make an acquisition, and their stock price has done virtually nothing. So Pfizer's trying to avoid languishing, getting stuck in the doldrums like Gilead. So they need something like this, and they need those drugs to pan out as well.
Yeah, I think they've got to at least stay in the news, if nothing else, and I think this accomplishes that. But they've got to kind of make the next deal. They are in a lot of ways very, very acquisition dependent, not only on buying companies getting the right price, but on those actually playing out. I mean, that's very much been kind of their move. So will be interesting to see how that goes, how far it gets, if the DOJ intervenes. Something to definitely keep an eye on. Meanwhile, at Union Pacific, we love talking railroads in the year 2023, but an activist is pushing for big change. Soroban Capital has held quite a bit of UNP stock for quite some time. For context, they're running about $10 billion of equity exposure. They've got 1.6 billion of that in Union Pacific. They've been highly engaged. They are very frustrated and unhappy with Lance Fritz.
I would call it Furtiz. I don't know how to say his name. This is where we need Ben.
They don't
know how to say it.
They don't love Lance, and they hadn't been happy with Lance since 2017. They're getting more and more aggressive, and the board is very much listening. Soroban sent a letter to UNP's board, and the board now says that they're going to replace Lance. So something to keep an eye on there. The stock up close to 10%. So the market is liking this. Sounds like the market has also been frustrated with the leadership at Union Pacific. It's always interesting when these things kind of play out. I feel like for every instance in which we have an activist investor coming in saying, hey, we need to shake things up, and the stock goes up, for every instance of that, we have at least 2 or 3 in which the activist investor comes in and says, hey, we want to do all this stuff, and the company and the board just says, nah.
Yeah.
And it's just a false headline. But this one seems to have real legs, if for no other reason than the market really likes it. This is a stock that's up 10% on pre-market trading with really good pre-market volume. 428,000 shares have been traded pre-market. It's not just a couple folks getting excited about it. It seems to really have some legs there. Any thoughts on this, Tom?
Yeah, I think in the railroad space, there can be a ton of value unlocked. I mean, we for a long time held Kansas City Southern, which ultimately got bought out, but their whole deal was they had a strategic piece between Kansas City and Mexico. They were rapidly updating their precision scheduling. They're basically just getting super lean, making a ton of money, and then bang, one of the big boys comes calling. And then I think the hope is that what's going to happen is one of the people can take over. There's a couple options. They've got a pretty deep bench that can come on and basically implement that same strategy that Kansas City Southern took, which is basically just, streamline the operation, make sure that they're safe and efficient, and there's not a lot of waste, and you're not just having trains sitting around all the time because you're not using the technology that exists in the world to make your business run, which is something that we've seen railroads be guilty of, continuing to basically just kind of schedule stuff as it comes in, not really think about the big data piece of it. So if they can implement that, I mean, I think the sky's the limit. I mean, we own quite a bit of UMP, and we like the company, and I think this just makes it that much better.
Yeah, and I just want to throw this out there. It's definitely Lance Fritz. It's just Fritz. There was a typo.
I was like,
it's just Fritz.
I've never seen this last name, Frtize, but
it's just Fritz. Yeah. The time is right. Fritz is not a fit. That would be the headline. This week, interesting stories from individual companies coming out. Target's going to report earnings tomorrow morning. There are a lot of undercurrents and kind of sub points to be paying attention to on that. Walmart previously during their earnings call said that they were gaining market share from higher incomes. That's not a surprise. That's something we've talked about on the call, I feel like, for the last 6 months. People kind of shopping down a level as it relates to what specific retailer they're going to. But I think with Target, you're not only looking for potential of losing market share in some areas, they should also be gaining as customers drift down, especially on apparel and merchandise, things like that. But with Target really, really looking at how the operating margins look like, they declined quite a bit last year and they got hit pretty hard. They need to show that, hey, the worst is behind us. We will also get reports from Costco later this week on Thursday on an earnings basis. So, Tom, how you feeling about Target?
I think the bar is pretty low. I think they've really dropped the ball consistently for, I call it 3-4 quarters now, where they were once considered one of the best operators in the game. And then, coming out of COVID, coming out of the lockdown, retail fever, they really beefed it. So my hope is that they clear the hurdle and then some. There's a little bit of an extra juice. Hey, we really accelerated here or there, depending on where they can find the extra numbers, and we see a nice update. That's my hope. Otherwise, I think it's one of those to be reconsidered. And then especially if Target has a bad situation and then Costco comes out strong, you can see that the operating side of it is really, really struggling. So there's a lot on the line for Target this week. But expectations couldn't be lower, which
they're very low. I mean, they got absolutely hammered early last summer when they reported earnings. And then they got hammered again on the next earnings report. They've got to somehow clear this very low bar.
They guided down and then they did an emergency additional guide down 2 weeks later, which is almost unheard of.
Yeah, not ideal.
It's really bad.
Goldman Sachs has an investor day tomorrow. 2022, a rough year, as you might imagine, with anybody in the financial services industry. We talked about trying to avoid that space where appropriate within portfolios. We've talked about that in macros as well as on the call. But they've got to figure out how they're going to message things on the consumer side, on the consumer banking, also on the consumer asset management, and get back to kind of keeping the main thing. Tesla Investor Day Wednesday. You going?
I'm not going. For a little inside baseball, but I've been trying to weasel my way into an invite for the last, month and a half or so. But I finally got the official stiff arm from Tesla Investor Relations on Friday saying that there just wasn't enough room. But I'm on the list for next time.
It's on the list.
So one of these days I'm going to show up and I'm going to high five Elon Musk just to see what happens. But I was excited to go, not just because Austin is a top 5 American city. But the rumor is that they're going to release a subcompact car somewhere in the $25,000 to $30,000 range. There's some tweets this morning with some very grainy pictures saying, "Is this the new Tesla subcompact?" So we'll find out someday this week whether or not that's actually the case. But the idea is that Elon Musk's Master Plan 3 is going to be rolled out, how he's going to scale electric vehicles for society. So far he's the only one who's really had a pretty good plan and executed on it. A lot of other companies are having to squash their production. We saw the Ford Lightning get basically halted. Was it last week, 2 weeks ago? Yeah. Because they just didn't have enough raw materials to make it happen. Yeah. And there's just too much demand. So, so far Elon's managed to he could be credited, I would say, with making electric vehicles something that people are actually taking seriously. So we'll see what the Master Plan 3 looks like.
Yeah. Is Master Plan 3 indicative of the failures of Master Plans 1 and 2, or is it like indicative of success? Like, I feel like if I make a master plan and then later I'm like, actually, no, this is the master plan. I don't know. Do I gain or lose credibility?
I feel like it's just leveling up. It's like, I feel like there's like that Marvel thing where they have like the phase 1, phase 2, phase 3.
True enlightenment.
Yeah, whatever they call that. So I think that's what's happening is they're just going up the ladder.
There we go. So we'll hear more about that on Wednesday. Some interesting names to keep an eye on, for sure. We don't really have Tesla very widely held at all across the portfolio. It's just kind of in pockets where clients have interest in it. Goldman is relatively widely held. Costco and Target, pretty significant holdings firm-wide, at least in terms of the breadth. We're not necessarily heavy into those stocks, but definitely show up in a lot of portfolios. So definitely a lot of things to kind of keep an eye on. We will be back tomorrow at 8:30. Assuming Ben's legs haven't fallen off, he will probably be back to join us. He's been gone a couple days. Somebody left 3 fireball shots here in the recording studio. So those are sitting in Ben's chair. We're going to make him take all 3 of those before the call tomorrow. And things will go downhill from there. But appreciate you guys for being here. We'll be back tomorrow morning at 8:30.